Today is an Ask Me Anything show. So in the chat, go ahead and start putting your questions. Let me know how I can help you with your trading. And I'm going to start with the questions that are in our Discord because some people have really taken the time to put very, very well thought out questions in here. So I'm going to go to the questions from you section in our Discord, and I'm going to start there. I'm going to work my way from the bottom to the top, and of course, in the chat right now, be sure to put your questions. So let's see. This question comes from Phil. So I decided to take a quick day off and went west. Now enjoying a very scenic view of the McGillicuddy Reeks, Ireland's highest mountain, from beautiful Killarney Gardens in County Kerry. Dude, that is so sick. I went to my family and I, we went to Ireland last year. We started in Dublin, and then we made our way counterclockwise, anti-clockwise, as you would say over there, anti-clockwise around the island and back out of Dublin. So we spent a little bit of time over there. And then in 2010, we actually went into Dublin, and then we did it clockwise. Stayed at a couple of the same places, but man, Ireland is so cool. In fact, not long ago, my wife was like, Chris, I heard that we can buy an island off the west coast of Ireland for like next to nothing. And I was like, that sounds cool, but how are we going to get to Walmart? How are we going to buy groceries? How are we going to be able to do like regular life living on a remote desert island, basically? Okay, cool. So the question was, so did I gain 10% or lose 5%? Let's go a little bit deeper into this. I have a question for today's show. Can you show an example of what you might consider a strong golden ticket trading strategy trade and a not so strong one that might require a little more observation? I know risk management will cater for most of this that allows you to trade only in the evening time, but I'm sure there are times when you can get out during the day with a profit, but leaving it sit until the last hour is not good. Ferdinand gave an example yesterday where he talked about being distracted and lost $15,000. I was in a similar situation on Wednesday with the AT&T trade. I was very distracted and felt I wasn't in a strong position and acted on a prompt from a trusted member here and exited the trade. Honestly, the answer to all of this is, what is your plan? What is your plan, right? And what I mean by that is, for me, that's my plan. Like I'm not going to baby it all day. I have other things in my life that I want to do. I don't have to sit and monitor my trades, and neither should you. If you have a plan, follow the plan. One of my parts of my plan is, what time of day am I going to trade? I trade in the last hour of the day, the last 30 minutes, last 45 minutes, somewhere in there I look to trade. Am I going to get the very top? No. Am I going to get the very bottom? Pretty unlikely, but I'm going to get somewhere in between, right? And of course, there are days where a stock is falling all day long and it sucks. But that's okay, because that's part of my plan and I don't stress on it, right? There's days where it runs all day long. And had I got out earlier in the day, I'd be losing money. And that sucks too. So the real key to this, the key above everything, is forget your FOMO. No more FOMO, because I need you to focus on what is working for you and your personality and your time frame and your lifestyle. Once you figure that out, then the rest is noise. And of course, I really need you to just remember, you're not going to get the top price and you're not going to get the bottom price, right? The top 10% and the bottom 10% are the hardest to ever catch, but the 80% in the middle, that's the easiest. And that's what we're looking for. All right, next question. Let's see. Chris's master key tells you to get out of any trade if a market or sector breadth reverses when it's higher than 75. So let's clarify that, because there has been a lot of Discord posts around this. So what I'm looking for on market breadth, once I find the slide, where's my slide for market breadth? There it is. What I'm looking for on market breadth is this crossover point right here, where the green line representing the number of stocks with buy signals has crossed over the red line. If it goes over 75% and continues up higher, meaning more and more buy signals are coming, that's what I want to see. Absolutely. Let's go. Bring it. But once it peaks and starts to reverse, even before it crosses the 10 EMA following that point, even before then, that's where I look to get out. Now, if it's on the market, if the market peaks and starts to contract, I don't put on any new trades. I'll hold the ones that I have, but I don't put on any new trades. If the market peaks and contracts and then the sector peaks and contracts, then I exit everything in that sector. That's my rule right here. If the sector and market breadth turn negative on that day, I close the trades for that entire sector. Now, why am I doing that? If you look at this this chart right here, this was created by one of our members of the Discord, and it's such a brilliant representation of how the market actually works, because you're having people who are starting to look to sell and they start screaming sell, and then the market comes down. Then they start to look to buy, and then they start screaming buy, and the market goes up and it hits euphoria. And it repeats over and over and over. This is how the market works. And what's really cool about that is when you go into Outlier, you can actually see exactly this. You can see exactly this on the market breadth chart because it's so cyclical. Look at this. It's basically 2 weeks up, 2 weeks down, over and over and over. And I'm just like, wow, it's so crazy to see over and over and over throughout the history of all the data that we have here, this happening over and over and over. Now, when I'm trying to get out at the top right here, I love when there's more and more buyers coming to town, more and more people screaming buy, right? If this is the line for 75 and more people are screaming buy, let's go. The moment that it starts to tick down on market breadth, that's when we've reached peak euphoria. That's when I'm like, I'm out of here. Now, I did see another question, which was a good one. If it starts to peak back up again, are you looking to get back in? No, I'm done. I am done putting on new trades until the cycle starts over again. Until I can get in on, let's say if this is the 10 EMA right here, something like this. I'm done when it crosses down, but when it does start to bottom and turn back up, Chris is ready to get back in again, right? I want to have this. I want to be greedy before everybody else is freaking out and being greedy. And I want to be fearful before everybody else starts getting fearful on the way down. Does that make sense? Yes, I am trend trading, which does need people to come and scream buy behind me. And yes, I need people to start screaming sell. But I'm not trying to catch the top and I'm not trying to catch the bottom. I want that 80% in between. So fantastic question. All right, let's go to questions that are live here in the chat. Theo says, Chris, Outlier gave me a sell signal on at APPN. Should I sell it at the end of the day or should I sell it ASAP as the signal came? You know my answer. Theo, you know my answer. I don't have to tell you the answer because you know the answer already. The answer is, what's your plan? What's your plan? What's going to work for you? Right? I can tell you sell. Here's why I don't say buy here, sell here. I'm a losing situation. I am in a completely losing situation right now. Because if I tell you you should sell it at the market open and then it goes up, you're going to say, Chris is such an idiot. He cost me so much money. If I tell you to hold till the end of the day and it goes down, Chris is such an idiot. He cost me so much money. I'm going to lose position here, which is why I always default to, what's your plan? Do you have a plan? If you don't, now's the time to make it. Rocks play. I lost a lot of money when I started trading, and I've been paper trading for a while with okay results. All right. But now I can't stop paper trading because I'm afraid that something is going to change when I take it real. Dude, that's brilliant. That is super strong of you to realize that that's something happening to you. So here's what I would suggest. Start with one share. Start with one contract. Become comfortable with that one, right? Now, if you're trading one share and it goes down a couple bucks, you've lost a couple bucks, but you've still got your entire account left. But you're getting the mechanics of it. You're feeling it out, right? And then start increasing that position size until you reach a point where you don't feel comfortable anymore. So you back it down from there. Okay. You should be able to sleep at night. If you can't sleep at night, you're trading too big. But that's where I would start, dude. And I understand the fear of losing money. I've gone through that as well. There was one night where I was putting my son Elliot to bed. And I remember I put him to bed. I'm walking out of his door. And I had like just cold sweat, cold chill, just overwhelming sense of dread hit me. And it said, what if the market crashes tomorrow? Like Tiger King said, I will never financially be able to recover from this. I don't know why I thought that. I don't know what caused that to happen. But I remember just like instant cold sweats taking me over. And that's because I was trading too big. My size was way too big. And of course, that's when I had to back down. That's when I had to back down. I had way too much risk in the market. But that's where I would start, dude. And what you're feeling is completely normal. Don't think that you are that there's something wrong with you. What you're feeling is 100% normal. That's why I say just start with 1. Get used to that. Then go to 2. Then go to 4. Then go to 12. Then go to 50. Then go to whatever you feel is comfortable. And if you take 1 step too far, that's okay. Take 2 steps back and run at that point. Great question. Andy, realized that work stress equals poor trading. Yeah, for sure. Started working the screener and position sizing. Woke up my trading and have a new attitude. Jumped on the T option, made a quick 8%. Thanks, Chris. You're welcome, Andy. You're totally right. So the stress in your life will absolutely 100% impact your trading. And that's why when I talk about creating your trading plan, right? Don't make it in a way where it causes additional stress, because trading on its own can be stressful. So don't do it in a way where it causes additional stress. Don't design your plan where you have to sit there and monitor it all day long, right? Where your phone runs out of battery because you've been staring at it all day instead of actually doing work. Follow whatever plan you decide to come up with. And, I saw someone in the YouTube comments the other day, they're like, Chris, just what do you mean follow a plan? I don't have a plan. You need to tell me the plan. I can't tell you the plan. I can show you my plan. I go through my plan every single day, but my plan is going to be different than yours. And that's okay. Is my plan perfect? No, for sure not. Does my plan work for me? Yeah. Is my plan profitable? Super. But that doesn't mean that it's going to work for you, because 2 people can have the exact same trading rules. In fact, Richard Dennis, who created the Turtle Trader experiment, says, I always say you could publish the rules in a newspaper, or in this case, I always say I could give you my exact plan, but no one's going to follow them. No one's going to follow my plan. The key is consistency and discipline. And you're not going to get that from somebody else. You're going to have to develop that with yourself. Fantastic question. Backlav, when you were adding more positions on winners, was it in options trades? And did you roll options to the new strike or buy more on a different strike, or just bought more of a holding strike? So let's dissect this question. We're going to need a chart for this one. So let's say, for example, that and this is years ago, because I only do lump sum now. Hate this with TradingView, and I have to click over and then click back, and then it works. I don't understand why my views change like that. Actually, let's do this. Let's use this. Let's remove this here. Let's say that I was adding 2 positions. Okay, let's say I had an opening position here. Let's say, for example, that I opened here with maybe a green light, and maybe you did. You could have done this. And then it went up a bit, and I was like, okay, cool. I can add more here, and I can add more here, and I can add more here, and I can add more here. Dude, you could totally do that. A lot of traders pyramid into trades. I don't. I used to. I don't anymore. And I didn't do it by rolling up the strikes. I actually did it by adding additional strikes. So, for example, if I had bought, let's say I'd bought the 88 strike, then I'd buy more of the 88 strike, and I'd buy more of the 88 strike, and I'd buy more of the 88 strike. But I stopped doing this, and I'll show you why. Let's say on this side, I move my lines over so I can illustrate the point here. I no longer pyramid into trades. I do lump sum. And lump sum meaning I put my entire load in, my entire position in at the beginning. Is that the most ideal? Some people would say it is. Some people would say it isn't. But I don't dollar cost average into anything. I just do lump sum. So for example, if I bought here, I have 1, then I have 2, then I have 3, then I have 4, then I have 5. Okay. Now, as it's going up, my average price is going up, and that's okay. I have no problem with that. Because that means I'm a winner. The problem comes when it starts to reverse, because when I sent the train out, I had 1. I sent the next train out, I had 2. I sent the next train out, I had 3. Sent the next train out, I had 4. Sent the next train out, I had 5. But when it reverses, you now have 1 train working, heading back towards you, 2 headed back towards you, 3 headed back towards you, 4 headed back towards you. And what would have been a nice winner turns into a monster loser. A monster loser. Because you just sent out 1 train and you came back with 4. working against you. So while this one is still profitable, this one's a loser, this one's a loser, this one's a loser, and this one's a loser. And this is why I stopped pyramiding into trades. Because yeah, when it works great. But when it turns around, oh my gosh, it is like having 3, 4, 5 times big of a position coming back at you, all of them losing and taking out what winner you had. And that ultra blows to me. So I don't dollar cost average in anything. It's lump sum right at the beginning, right when I get my buy signal. Fantastic question. Shane says, my son will be born today. Today is the double great day. Everybody pay respects to Shane in the chat. Everybody say congratulations to Shane in the chat. I'm going to do that too. Congrats, Shane. Dude, congratulations to you. I'll never forget when I became a father. April 1st, that was his choice, not mine. April 1st, 2012, my son Colin was born. And I remember being there with my wife the entire time. And I remember my mom, who we call Nana now, I remember her walking in, just like doing her thing, and then tears instant, like goosh. Oh man, that was such a cool moment for me. Like I have goosebumps. So congratulations to you, my friend. That is so, get a little teary-eyed right here. You're gonna be a dad for the rest of your life, man. It's pretty great. Pretty great. All right, I need to change topics real quick. Otherwise, it's gonna be waterworks around here. Mr. Flip Flop, are you afraid of spikes? Just like what happened a few minutes ago. I don't know what happened a few minutes ago, but I'm not afraid of them. I have my plan. I know I'm gonna get in. I know I'm gonna get out, and I don't have any expectations. JG, I think you might have put this in the Discord. This is a good question. What indicators are valuable and what indicators are absolutely worthless? Now, this is subjective. This is ultra subjective. So let's do this. Remove 9 indicate. Oh no. Oh no. I just clicked remove all indicators instead of remove all drawings. Damn it. Remove 6 drawings. Hang on. Can I go back? Can I go back? How do I go back to my chart layout? Frick, I did not mean to do that. Yeah, outlier layout. I don't want to save it. Recently used. Is that going to work? Open layout. Here we go. I don't think that worked. Dang it. Okay. Well, we can do this together then. Indicators. So I have some that I've favorited, but there's like an impossible amount of indicators, and like thousands of indicators. So many different indicators. So what are some that I have used is a better way to look at it. And what are some that I've used that I no longer use? So let me add on I'm so annoyed that I just lost all my moving averages. So we'll just do with that, right? So I like a 10 period, a 20 period, and a 50 period moving average. I like a default 14 period ATR. And I like order blocks. That's all I put on my chart. Now, of course, I also look at the outlier data, which is not available on charts at the moment. But we can pick any stock in here, right? And we can look at the outlier data to give us some perspective here. So AM, what is this? AM is Antero Midstream Corp. So this will show you if investors are getting more greedy or more fearful. And what's really cool about this is the further it goes, and this is a perfect example, the further it gets into greed, the more likely it is to snap back. So this was a greed of 87 out of 100, huge snapback. But it's starting to get more greedy and less fearful. This right here is who's in the sector. And so this is in the energy sector. And this shows you on average how the sector is looking. So this sector is getting less fearful, moving towards greed. So these are things that I absolutely love because we're trying to make sure we get out of the way before people get too greedy. And when they're too greedy, all the buyers are already there. And who's left are the sellers. And so we want to get out of the way. We want to get out of the way. But a couple other indicators that I don't use, but a lot of people use, RSI is one, Relative Strength Index. Now, I know a lot of people use it, and I don't. That's okay. And that's okay. I know a lot of people like to use MACD. Oh, geez. I don't know what that is. I have no idea what I just put on the chart. What the heck is that? MACD strategy. How about we just delete this? MACD itself. So this is moving average convergence divergence. So what does this mean? So if we add in the, get out of the way. What are the settings on this MACD? So this is looking at the 12 EMA and the 26 EMA with a 9-period EMA of the two EMAs. Okay. So what it's doing is it's looking at, if this is the 12 minus the 26, then it's looking this way. This is the moving average of the 12 minus the 26. And so when it changes direction, it basically shows you if the moving averages are spreading apart or if the moving averages are coming back together. And then when they cross, that's what that's represented as well. It's not something I use, but it's something other people use, and lots of people use it. So honestly, I really can't give you what's useful, what's useless, because that's super subjective, right? Whatever works for you and your plan. But I use the 3 moving averages, the 10, 20, 50. I use the ATR for position sizing and to show me volatility, as well as the half ATR as an exit point. And then I like to use the outlier data. So that's it for me. Hey, Wingstop's new headquarters is in downtown Dallas now, off 75. I think they moved in the last 2 years. Oh yeah, I was mentioning that yesterday. It was a few years ago. I drove by the Wingstop headquarters in I think it was in Richardson, which is a Dallas suburb. And I was like, this is your headquarters? It looked like it was in a strip mall. So how about that? I didn't know that. Skinny Buff Guy, Chris, you said by the way, Skinny Buff Guy was nailing it on the memes yesterday. So we created a memes channel, which is so fun. Like this one here, which is his profile picture, which is hilarious, and I love it. Right, me riding a monkey rocket or a donkey rocket off to the moon, the monkey with the hammer. Get back here! That was so funny. I showed that to at least 3 different group texts yesterday. And then this here, me being Scrooge McDuck diving into the me money bin. Yeah, I actually told my kids that. So Shane, one day you'll get to play Minecraft with your kids. And earlier this week, my kids were like, Dad, let's play Minecraft together. So we were playing Minecraft, and we were in survival mode, and the creepers and the zombies were chasing me around. It was the first time I ever played Minecraft. And we talk about the Minecraft movie all the time. And with the chicken jockey and thing, it's such a meme. And so we're playing a Minecraft, and I was like, I want to do creative mode. I want to build my own money bin, and then I want to swim through the gold coins. So my son this morning, my 13-year-old son was like, okay, Dad, we'll figure out how you can swim through the gold coins. That'll be fun. Okay, totally off in a different direction. But to his question, do you set a certain percentage of your personal accounts into SPY or another ETF and trade with the rest, or do you just trade with the whole thing? Trade with the whole thing, dude. Trade with the whole thing. Why would I want to put, and this is rhetorical, I'm not like chastising you here. Why would I want to put, let's say 50% into SPY, which might make 8 to 10% over the course of a year, when I could put, 8% into one stock, 8% into another stock, and I could have 12 different positions, all that are working right now. And if they're not working, I bounce them out and I look for a new one that's working. So for me personally, I would much rather put money into something that I can see is working versus putting something into an index that I'm just hoping will end up working. And trust me, if you're putting money into a stock looking for the dividends and the stock is going down, those dividends are not going to help you as the stock's going down. Dana. Yes, I do know of a great video that teaches options from zero knowledge. So this one in the VIP Investors Toolkit, where's that at? I guess scroll up. VIP Investors Toolkit. I didn't make this. And when I watched this video, I was like, I could never recreate how good this is. So I'm just going to let this be our video for options trading. So inside of the Discord, go up to your options trading for beginners, ultimate in-depth guide.
What's going on, YouTube?
And it's this video from Project Finance. So this is Chris Butler. I actually had a chance to interview him once on the channel if you want to go back and find it. But do put out a 3-hour-long video explaining options in as much depth as possible. And like I say, I remember specifically sitting down to record this video. Not that I was going to react to him, but redo his basically and give my own thoughts. And I was like, oh, this is great. I could never compete with this. I'm just going to tell people go watch that video. So that's the one. And it has 17 million views at this point. 17 million views. I can't keep up with that. It's a great video. John, if only monthly options are available and 2 weeks to expiration, would you take a 5/16 option or more likely go with the following month? Outstanding question. So let me log into Tradier, and we'll look for a couple ideas. So my style of trading, I like to look at 21 days to expiration to start, but I'll go a little earlier if I need to for liquidity. I'll go a little bit later if I need to for liquidity. But generally, I like to only trade on the monthly contracts because those are the ones that have the most liquidity. So first, Shane, let's look at AT&T. We can maybe find some good examples here in AT&T. Loading trade ticket. Almost there. Loading data, loading layout, and we're in. All right. So this right here is showing all the expirations. There's one that expires today, one next Friday, the one the Friday after, etc. But if we go to just the regular meaning monthly, you can see here May 16th is 14 days out. I closed the 26 calls 2 days ago or yesterday. So I'm out, and that's fine. I'm not even stressing if it is or isn't going to work. So looking at this one here, lots of liquidity, 3,000 contracts on this particular strike. If I went to June, that's 49 days out. And if I go to the 80 delta, that would be roughly here, the 25 strike, that would cost me $3.10. If I go to May 16th, which is 14 days out, and I go to the 80 delta, that would cost me $1.41. So looking at the two of these, right? I wish it showed the price right here, but basically within $1.50 between the 2 points is the 80 delta on the option strike. But what we're looking for here is this one cost me $1.41, or this one cost me $3.05. So this one cost me twice as much, which means I can buy half as many. Okay. Now, because this cost twice as much, I don't think I'd want to go 49 days out versus 14 days out. But I would double check to see if I could do the 21 day to expiration and have liquidity. There's nobody there. And now when you see this, that means it's just a new option chain for that date, and that people just haven't got there yet. Or you could go one earlier, and you can see a lot of people are on this one here. So for me, if I had to choose between the 14-day, where's this at? 14, no, expiration, there we go. If I had to choose between the 14-day and the 49-day, I would start at the 14-day because it would cost me half the price to do this. But I would still have my plan within the last week to roll it out if I was still holding it. So 1 week to expiration, can I roll it up and out for a credit? Meaning, if I'm holding it right now, can I roll it to the next further out strike to keep that time for a credit? If I have to roll it for a debit, that means I take on additional risk in the trade. I'm not interested in taking on additional risk into anything. So really, really good question. That's what I would do. I would start here where I have the most liquidity, even if it is 14 days. I don't want to go sooner than 14 days because I need the time. I need to make sure it's going to work. If I'm doing something where it's only got 5 days, that makes me really nervous, really, really nervous. 7 days, that makes me really nervous because if this goes out of the money, I don't have very much time for it to work and come back for me. So I need to bounce it as fast as I possibly can. The objective here is to get in and out in the fastest way possible with the most liquidity. Because, oh my gosh, if you don't have liquidity, you cannot get in or out of the trade. You will get absolutely stuck. Yannick says, why don't you consider volume in your trades? Just don't, right? I care more about the price. Now, volume does change price. I will give you that, right? If you don't have volume, God, I'm so annoyed that I lost all my indicators on here. I saved a profile. Why can I not go back to this layout that I had? Right, with all my stuff on there. Leave that one. Just freaking annoying. Sorry, what was the question? Why do I not consider volume in my trades? It's just not something I do. But I want to put on volume. Hang on. Oh, I'm so annoyed. Okay, indicators, moving average, exponential. I just want volume. just volume. There we go. Now, there are people who will say, well, the move must be confirmed by volume. And I will say volume can confirm your move, but volume can also get super weak like this. And then you can buy it, and then volume starts looking still super weak, yet the price is going like this. And here's the deal, right? Volume can do what volume's going to do. But at the end of the day, if price isn't moving, that's all that matters, right? Price, or what is it? Profits follow price. I can't say the other thing. The other thing is now banned. Profits follow price. Because profits follow price, volume can do what volume's going to do. And I'm going to make sure that I get in and get out with the best prices that I possibly can. Vaclav, do you consider risk of holding over the weekend? So not really. Now, granted, with Trump, there's a lot more that can go on over the weekends than used to be. Yes, this weekend, I will sit on my golden throne and I will tell Xi and Putin and every other stupid leader who is not me that I am going to crash the stock market. Just watch. Right? And he does his thing. And then, oopsie daisy, I don't want to look like Joe Biden. I need to make sure that the market goes up from here. So I'm going to tell everybody they need to buy. Politics aside, we can all agree that Donald Trump is the only thing that's really moving the market these days, right? He can say one thing and the market goes up. He can say one thing and the market goes down. And he could say the other thing the same day and it'll go all over the place, right? So politics aside, yeah, I do have more anxiety about that than I used to. But I still got to follow my plan. Gotti, how you doing? I'm about to deploy some funds into a lump sum into the market. Would you deploy via options or straight up buying stock? Well, for me, I only buy options. I only buy options because I can get leveraged investments versus just buying the stock outright. But you need to understand what you're buying if you are going to buy options versus buying the stock outright. Okay. I understand the risk that I'm taking in doing so, and that's why I keep my risk exceptionally tight. And I'm also not putting my entire account into any one stock, even if it is the index, because that one can move against you in a big way, in a tremendously huge way that you really don't want it to. So a good question, but you got to come up with that plan for yourself. Brandon's going to send everything from Amazon to that remote island. Keisha says, when you roll your option, you only roll up to the next strike with the same criteria, including the same expiration date. So couple notes on this, kinda, but not exactly. So let's do this. At each profitable ATR, so let's look at Palantir. Let's say that you bought it at this price here, 99.27. And let's say that it went up and you've already measured the ATR, which I'm not going to bother to do right now because I have to go add the ATR indicator and I'm very annoyed. Let's say it went up by this much. Now, if I were in Palantir and I was on the May 16th and I was in, let's call it the 115s, and then everything's working, and now that's a couple dollars in the money, I would then roll up, and it doesn't have to be one strike. It can be multiple, right? Let's say, actually, let's use a different example on the, let's say that I had bought the 100s when they were at the 80 delta. Now they're at the 84 delta. And I want to move down from, or I should say move up in price down the option chain back to the 80 delta, which is like the 103. And there's still plenty of liquidity between these points here. So I would sell to close the 100 that I already bought, buy to open the 103, more than one strike. As long as it has liquidity, as long as the extrinsic value is low, that's what I'm looking for. So we're basically trading one for the other, keeping the trade alive. But yeah, good question. Well, let me make sure I didn't miss anything. Yeah, and now you can do out in time. You can do out in time, but when you do out in time, you're not going to get the same. You're going to have to pay a debit most likely, unless you're going up multiple strikes. So if you go from like the 100 on the May 16th, and then you go to the 103 on June 13th, if you can do it for a credit, that's what you're looking for, because you're reducing your risk. If you do it for a debit, you're actually increasing your risk in the trade, and you don't ever need to increase your risk. Fantastic question. Squato, so you normally trade the front month, and how do you manage time decay? So like I say, my normal go-to is 21 days to expiration. And managing time decay is easier than you think. Let's do this. Let's do expirations. Let's do regular. Now, to explain what front month is, this is the first month. That's what the front month is. There's the next month. That's the second month, third month, etc. Right? So for me, I like the first contract that's right around 21 days out. Now, if it gets down to 7 days, I'll go to the next month. Now, to the question of how do you manage, let me double check his question here. No, squat toast. How do you manage time decay? So for me, whenever I'm selecting an option strike, I go for 20% or less on the extrinsic value. And I'll show you why. Whenever you're looking at options, you have different spots. You have at the money, you have in the money, and you have out of the money. At the money means that this is starting to get intrinsic value. Once it goes in the money, that's the difference between the strike price and the price of the stock. So right now you can see it has about 20 cents of intrinsic value. That's because the price was around 120, 120 at the time. Prices are moving right now. And if you see the 122 strike, it has absolutely no intrinsic value at all. It's all extrinsic. Extrinsic value is what will decay to zero. Extrinsic value on every stock, on every option, on every time frame, every time goes to zero. You want to minimize the decay. You want to minimize the decay if you're buying options. So looking at this here, if you're buying at the money or out of the money, 100% of it is extrinsic. That's, in my opinion, you're just buying lotto tickets. You're hoping for the best. Whereas a leveraged investment will have 20% or less extrinsic value. So let's go up to around 20 or 80 delta. 80 delta is right here. And you calculate extrinsic value divided by the price of the option. So we would do 320 divided by 2135. 320 divided by 2135. And so it has 15%, 14.9 of extrinsic value is in this. Now, this will decay, but it's only going to decay 20%, 15% over the life of the option. If you're buying out of the money, 100% of it must decay over the same time frame. So while mine will decay at a rate of, let's just use 20% to be consistent here. If I have a option that expires in 14 days, then 20% of it, so 20 divided by 14, so 1.42% will decline every day in extrinsic value. Whereas if I buy an out of the money call, 100% of it must decline over 21 days. So 100 divided by 21, was it 21 days or 14 days? It was 14 days, wasn't it? Yeah. Divided by 14. That means 7% must decline over time on average. Like it's going to accelerate when it gets closer to expiration. But 1% will decline or decay in value on my leveraged investment, my deep in the money calls. 7% per day on average will decay on your out of the money or at the money calls. Big difference, huge difference. This is 7 times more decay. I want to pay as little extrinsic value as possible because that's what goes down. That's what goes down. And a fantastic question. But to that point, you can trade whatever month you want. You could trade 6 months out, but if you go deep in the money, lowest amount of extrinsic value, the same principle applies. Same principle applies. It will decay a lot smaller on a per day basis than it would if you're going out of the money. Orlando, SoFi, sell signal. What about waiting for outlier to also go red, confirming the overlay for buys and sells? Okay, so Orlando's question is on SoFi. So the overlay is back here. So the red means it's within a downtrend. Your 10 is under the 20, price is under the 50. White means it's in between those 2 points. And green means your 10 is over the 20, price is over the 50. You can do that, dude. You can do whatever you want. You can choose to look at these in any way, shape, or form. But personally, I would want to get out sooner than later because I know it sounds crazy, but exit points are significantly more impactful to your bottom line than entry points. People love the idea of where do I get in, where do I get in, where do I get in, but they forget about where do I get out. So for me, I would definitely take a sell signal when I see a sell signal. But you make your own plan. Yannick, when would you roll out as well as up on a trade that hit 1 ATR? If it's getting really close to expiration and it's within that 7-day window or so, and just rolling up still gets me within that 7 days, I would roll up and out. I would roll up and out. That's a great question. Let's see. John, day trade in the morning, swing trade in the afternoon is your plan. That's it. That's perfect. You come up with your plan and that's what you go for. Mitch, I would say that's where having a good control and a stop loss works, right? Helps you with a specific time. Lose FOMO as you force a trade within a set time frame and save from crashing. Yeah. Create your plan, lose your FOMO. Do those two things and you'll be really successful. JG, even though a stock sector breadth is going down, but fear is in the early stages of greed, is it still a good position to take? That's up to you. It's up to you if it's a good position. But let's go through his idea here. So let's do market breadth, and we'll do SoFi here. Right? Would SoFi be a good example? Stock sector breadth is going down. So SoFi is in the financial sector, but fear is in the early stages of greed. So let's go to the financials. And we can see that the breadth has peaked. Breadth has peaked. And then it is in the early stages of greed right here. To your question here, is it still a good position to take? Well, that's up to you. And I can't tell you if it is or isn't a good position. Like I say, I am always in the losing position of, oh, Chris said do this and I lost money. Nah, I can't tell you what to do because that will be the outcome every time. What I will say is if market breadth is contracting, that means more and more people are starting to be screaming sell. And I don't want to be there when people are starting to scream sell. Even if the stock itself is greedy, I need to make sure that the sector is working for me because 40% of the move is due to the market, 30% is due to the sector, and 30% the stock itself. So take that as you may, but that's the way I'd look at it. When do you take profit on a trade if purely using 10, 20, 50? When the 10 EMA starts to turn downward, or should you always wait until the 10 crosses below the 20? So I can't tell you when you should do it, but I'll give you what I call red light, green light. And I have to add this back into my chart, and I'm freaking annoyed. So moving average exponential. Let's do this as a 10. I'm so annoyed, you have no idea. This should have just stayed. Let's do a thick line because I like them thick, like that. So that's my 10. Now I have to do the same thing 2 more times. Moving average exponential. And I have to do this. I have to change it. Oh, that was the first one I had. And then I need to do this one. 20. Let's do this here and then there. So there's my 20. And then I need to do it again because I'm annoyed. Your average exponential a third time. For the 50. In red. That's not red. Is that red? That's red. And then let's do, I like a thick there. There we go. All right, so 10, 20, 50. And then what I like to call red light, green light. Green light meaning the 10, 20, 50 have crossed down, and then they cross back up. And the first time they cross back up, you could consider that a green light. Does that mean it will win every time? No. But it does tell you the direction of the trend. Now, you could wait for the 10, 20 to cross back, right? You could wait. In fact, let's do it on this side. It'll be easier. Here's a better example. So your green light came here on this candle, this little tiny red candle right there. That was your green light. Not once did it close under the 10 until maybe here, but we'll call it right there. That was where it crossed under the 10. A couple days later, it crossed under the 20. The 10 crossed under the 20. So if you didn't get out here, but you got out here, that was an additional, because you see where it crosses right there on the chart. You don't get out at that price. You get out at this price. That was an additional 15% down. 15% down additional. So for me, dude, I'm telling you, if the 10 EMA breaks, I'm out. Goodbye. See you later. Because that's just one of my exit signals. Gene, what's your plan? I mean, I'll go over mine, but it doesn't mean that it's going to be the same as yours. And my plan's very involved. I have a lot of things that I look at. So first, it starts with the market, right? I want to make sure the market's trending in the direction that I want to trade. So 10, 20, 50 pointing north. And then market breadth. I want to see the market breadth also increasing. And then I have these items on my screener to help me find stocks that match these items. And then I look on the charts to make sure there's no order blocks, no earnings, and that's above the prior day's low. And then I look at these things for my options chain. And then I look at these things for position sizing. And if you just look at somebody and say, give me your trading plan. I'm about to teach OVTLYR University. And OVTLYR University is going to be a 9-week program, 2 days a week, and it could be 2 hours a day each day. There you go. There's my plan. Good luck. Like, there's so much more to it than that. There's so much more to it than that. And that's why I always say you've got to come up with your plan. But these are the things you need to have in your plan. Making sure you're trading with the trend, making sure the breadth is going up, making sure you understand how to reduce risk, right? You reduce risk by not adding new positions. Do not add new trades until you've reduced risk in your previous trades. How do you reduce risk? That's up to you. It's one of my secrets. And you can pay me $997 and I'll show you how to reduce risk. No, I do everything for free here on YouTube. Then I run the screener, and then I do some chart scanning, and then I look at the heat maps, and I look at liquidity, and I look at position sizing. So these are the things that you need to have in your plan. But dude, I can't just say this is what you do. This is what I do. Brandon says 1% of trading is about money. The other 99% is mental. This is so true. This is so true. And the problem with that, not necessarily a problem, but that's the reason why 90% of traders blow up 90% of their accounts in the first 90 days of trading is they can't handle the emotional aspect. Actually, there was one, I don't know if I can ever find it again, but there was somebody, hang on, maybe it was in the Discord. I saw it this morning and I was like, I want to talk about that one. Hang on, where did it go? Where did it go? Because I really, really, really want to talk about that one. Man, I don't know where it was, but the person was talking about the fear of losing, and that's part of the game, right? Now think of it this way: when you play Mario, right? When it was 1990, and your parents bought you a Nintendo Entertainment System, and you got the game, and you're like, "Let's go!" Right? Little Chris with this backwards hat. He's like, "Oh my god, let's go! Yeah!" I got my little my square stick, right? My square controller, right? This is my phone, but essentially the same size, right? And I'm like, "Oh my god, let's go!" I'm mashing A and B and the up, down, left, right, and I'm just going to town. And then the stupid turtles take you out. And you're like, "Oh man, I can never play this game again. I game overed." Or do you say, "Oh man, I gamed over, but I learned something, and now I can move on and I can beat those stupid turtles in that level, and I can move on to level 3. And you go nuts on it, and you're smashing the keys, and you're like, "Oh yeah, let's go!" And then eventually you get to Bowser, and Bowser takes you out, and you're like, "Oh man, Bowser took me out. Oh, I can never play this again." Oh. Now it sucks because you got to start all the way over at the beginning, right? But then you're like, "All right, Bowser, I'm gonna take you out." And this is back in the day when you couldn't look on YouTube to get the exact how to do it. So you had to go to whatever before pre-GameStop, right? And Toys R Us. You had to go to Toys R Us, and you had to get the guide, and you had to flip through the guide, and you're like, "Oh, I know. When he jumps, then I run underneath him when I'm little tiny Mario, and then I'll win. Oh, sweet!" And then you go do it, and you win the game, right? Think of trading in a similar vein. Yes, you're going to lose trades, but does that mean you lose everything and you can't play again? Only if you bet the farm, if you put your entire portfolio into something and it goes to 0, which can happen. Should you let it happen? Absolutely not. But that's why position sizing is so critical, so that you can lose a trade and still survive and move on to the next one. So taking losses is part of the game. There is nobody who can have a perfect win rate. It's impossible. Even the outlier data, it's impossible to have a perfect win rate because we can't predict the future. We can see the data, right? We can see when people are getting more greedy. We can see the trend is moving in our direction, but we can't know all the variables. Like Donald Trump sending out a tweet is now a variable that we have to contend with, where we didn't have to do that for 4 years. When you go through this process, you'll understand it's okay to lose. It sucks to lose, of course, but it's okay to lose. There's no shame in losing. Mark Minervini, one of the greatest traders ever, one of my mentors, has this quote, says, "There's no shame in losing money on a stock trade, but to hold on to it and let it get bigger and bigger, or even worse, to buy more, that's amateurish and self-destructive." So if you're afraid of taking losses and you haven't traded because of that, start with just a couple of shares and start building up the calluses of losing. Build up those calluses of losing, and it's okay. Just realize it is okay to lose money. Just make sure your losses are small and let your winners run out of control. CJ, what do you do if a price forms a sell order block and starts to move inside it on a daily, yet not breaking outside? Oh, dude, this is a great question. And I've been there. I have been specifically there. I know exactly. Oh, I'm so annoyed. My indicators are gone. Hang on. Okay, and then one more. I don't even know if that worked. Okay. So let's say, for example, he was in this trade. Let's say he was in this trade and he's watching it and it's going and it's working. Everything's cool. And a couple days later, he's inside the trade and this order block develops. I'm out. I am out. When this comes through, when this comes to town, I'm out. I'm not holding it. There's no way you could convince me to keep it. Now, what happened later? It jumped, and that's okay. But I followed my plan because when it's in this order block right here, this creates support and resistance. And you can see it went sideways from October 10th to October 25th. So for 2 entire weeks, you'll be sitting here hoping that something works, or you get the data says oh, it's in an order block. Okay, I'm going to move on. I'm going to look for something new. Do you mostly do options trading? Options trading is too confusing and scary. You know what, Sarah? That's okay. Listen, that is so okay. Yes, I have done options trading since basically 2009. So for me, I have no fear of it. I know exactly what to expect. And of course, I know what winners look like and losers look like. But that doesn't have to be your plan. Not at all. If you want to just trade the shares, by all means, go for it. That's so okay. That's great. Don't even stress on it. Do you guys consider trader or investor? So I see some people taking offense to the term trader. I don't understand why, right? We all make the trade, right? Warren Buffett is a trader. His time frame is on a long-term time frame. You could find a Dave from our Discord group. He is a trader, and he trades within a couple minutes on futures, right? They're both traders. I think somebody wanting to claim the term investor doesn't want to be labeled as trader because they feel like trader. I don't understand why there's, in fact, I do not know why anybody would want to be considered one over the other. Well, the goal with both of these is to profit from the price movement, just different time frames. So call yourself whatever you want. Call yourself Miss Badass. How's that sound? Don't call yourself trader or investor. Call yourself Miss Badass. Take it to the house. Everybody's saying congrats to Shane. That's how far back I am on chat, by the way. Let's see. Just making money. You teach me an incredibly important lesson, portfolio sizing. Yesterday, I took 2 penny stock trades, each for 10% of my small portfolio. If the worst case scenario pans out, I'll lose 2.5%. Dude, that's awesome, right? Which means if the worst case scenario happens to you, you still have 97.5% of your account. How many of you watching this right now can say, if the worst case scenario happens, I still am going to have 97% of my account? Probably not many. I probably heard a little bit, right? I probably heard a little bit to hear, oh, if the worst case scenario happens, I still have 97% of my account. Maybe I need to change up position sizing. Wait a minute. There's an undo last action at the top, arrow to left. Oh my gosh. Please, please. Top arrow to left. Oh, no way. Yes. Vaclav, gold star, my dude. I don't know how many times I can go back, though. Does it go back that far? Son of a gun. I don't know if it does. It does. Oh, no, I maxed it out. Damn it. I maxed out the go backs. Okay, now I have to go forward. Damn it. Now it's not going forward. Okay. I'll know that for next time, Vaclav. Thank you very much. You guys are awesome. Okay, let's see. Sorry, just going through. There's a lot of questions in the chat. I only got time for like one more, so I want to make it a good one. I want to make it a good one. All of your questions are good, by the way. Yes, Luke. Leverage amplifies your gains and losses. Which is why I keep my my stop loss really small, right? That's why when I show my position sizing spreadsheet, when I say how much risk I want to take, I actually go like 80% of that less, because I do not actually want to lose 5% of my account. If I can only lose 1.2% of my account, that's even better. And that's why I keep my stop losses so small. King Nut, this will be the final question. How would you say psychology has something to do with it rather than stats? How much would I say? Oh, 100%. 100%. 99% of trading is psychology. And I'm going to break psychology down into these 3 steps right here. I'm going to break psychology down. If you can remember these 3 steps right here above my head, these 3 steps will change your entire life, right? Number 1. Do not have an expectation on the outcome of the trade. What do I mean by that? If I buy a stock at 100, of course we want it to go up, but can we set the expectation to say if I get in at 100, then I expect to win? Well, you're probably saying, well, of course, if I'm buying it at 100, of course I expect to win. Why would I have bought it in the first place? Have no expectations on the outcome of the trade. Change the expectation to your plan being followed. If you can focus on your plan being followed, which you have to create, and then you have to hold yourself accountable to following the plan you created. If you can do that, that is a winning trade. So there's 4 types of trades: a winning trade, a losing trade, a good trade, and a bad trade. A good trade is when you follow your plan. Irrespective of winner or loser, a good trade follows your plan that you created before you put on the trade. A bad trade is when you're like, well, I'm bored, I got nothing else to do, let's put on a trade and see what happens. That's a bad trade. Or another bad trade can be following your plan at the entry, but then when you get any sort of pressure and the stock goes against you, being like, oof, I don't want to take a loser. Oh, this sucks. Okay, I'm not going to follow my plan anymore. That's a bad trade. Change your expectation to no longer be on the outcome of the trade. Change your expectation to say, I will follow this plan that I made no matter what. And if it turns out to be a loser, that's okay, because I know at some point I'll have a winner that's bigger than my loser and it's going to pay for this one. Number 2, do not set a profit target. If you're buying a stock, let's say you're buying Palantir, and you say, okay, well, I'm going to buy it right here because I'm a genius. I'm going to buy it right before earnings and it's going to pop up and I'm so smart. And then it does pop up and it does. And you're like, okay, well, my profit target, because I analyzed all the fundamentals and it says the price should be this. My profit target says it should be $130. Okay. Palantir gaps up. It runs. It's awesome, but it doesn't reach 130. Now you've set your profit target way above price. Price is telling you, it's not going to work. And then it goes months and months and months later. And will it go up to 130? Maybe. It just might. But now you're stuck, emotionally invested on 130. And even worse, if you look at something like AMD, which has been going down for ages. Trash that. AMD's been going down for ages. How many YouTubers have you seen talking about, oh, my price target on AMD is 150. My price target on AMD is 75. My price target on AMD is 212. Does it matter? No. Your price target is meaningless to the market itself. The market is going to do what the market's going to do. You have to choose to listen to the market and not try and tell the market what it needs to do. Do not anchor any price because the market doesn't care. Market doesn't care. And lastly, have a plan to get out when one of your exit signals is hit. These are my exit signals. And because I have no expectation on the outcome, I don't have a profit target. I have no idea how much money I'm going to make. Not at all. But I know my losers will be small and my winners can run for as long as they'll run until one of these things is hit. And when it does, I get out. And I don't have an expectation on how much I'm going to make. Not at all. But I do expect you to come this afternoon. YouTube wants to help save time, make money, and start winning with less risk. So therefore, it's going to show you one of these two videos. You need to click them right now. Have a fantastic day, and I'll see you this afternoon.